Something we are going to share a screen. I've never done a PowerPoint before, but this is going to be awesome. I know it. Is that it?
And if you can start your timer, please.
There we go. Is that good? Can you see the screen?
Yes.
Okay. Not sure what happened here. All right. So we're going to talk about insurance, and we are going to do a little bit of a primer on insurance. What is it? Okay. So basically what we're doing with insurance is we're transferring risk. Okay. So if you have something like property, or you're in business and you have to have liability insurance, what you're doing when you buy insurance is you're transferring the risk. If you have no insurance, then you're taking 100% of that risk on yourself. Okay. If you buy an insurance policy, which is a contract, you are transferring some of that risk to the insurance company. So if something happens, the insurance company is going to step in. They provide defense costs, investigation, accident investigations. They do all that stuff. You don't have to do any of that yourself. Common definitions, obviously, these are highly technical terms. So not sure why I have lost. Anyway, so you obviously is you. Your stuff is everything that you own. And then the other guy, these are all technical terms. The other guy, of course, is the person that isn't you and is not covered on your policy and not named on your policy. Every small business does need insurance. You don't, by law, you don't have to have it, but if you're in business, you want to protect that business. If something happens that's not in your control, you're going to want that business back. Okay, that's transferring that risk. That's what insurance does. Is it gives you the opportunity to run your business, enjoy your business, and know that if something happens beyond your control, you get to keep your business. It's very important that you pick the right insurance agent. Don't go online and talk to somebody you've never seen, heard, or probably have never talked to again and get your insurance from them. You need somebody that you can trust. If you have Naya doing your books, you can trust her that she is doing your books and filing your taxes correctly. And if you get an audit, she's going to be there for you. Okay. An insurance agent is just as important as that. You want your agent to be able to know what they're doing. They can deal with you. They know what you need and what you don't need. Choosing an insurance company is also important. One of the best questions you can ask any agent is, have you worked with this company in the claim process? And how did that go? Because that's when you really need your insurance to work for you, in the claim process. Okay. All the other stuff can be annoying, the certificates, the payments, stuff like that. But the important part is what's going to happen when you have a claim, and you will have a claim. You will. It's about every 7 years you have a claim. Let's talk about some other stuff. Liability. What's the difference between liability and property insurance? Liability obviously protects you for somebody who, like this guy here, steps on a banana peel that you had on the floor in your office. Okay, down they go. That's going to be your liability. You were liable for that because you didn't pick up the banana peel. Okay, if you're not liable for whatever happened, if you didn't do anything, okay, it was an accident, there isn't not going to be any coverage for that. So just because somebody falls down in your office doesn't immediately say that they are going to be covered on your insurance. You have to have done something to make that a liability. Okay. You also can control, or you also cover other people's property. If you damage their property, that's under the liability. Personal and advertising injury is interesting because personal injury is not bodily injury. It has to deal with reputation. General liability, there's a couple of other terms in here. If you're running a restaurant and you cause a fire to the building that stays within inside the 4 walls, that's fire legal liability. Okay? If you burn the building down, then it comes out of the liability portion. But if you only damage the building because it was something you did, that's fire legal. Okay, it's different coverage than your property insurance. Medical payments, this is a really good one because nobody has to prove that you're liable. It's the only coverage on the liability side that liability is not expected. Okay, so if somebody comes back the next day from your restaurant and says, hey, I had chipped a tooth in that burrito and had a bone in it, nobody ever saw it happen, but that will still pay. It's not a lot, $5,000, but it will take care of the dentist bill. Hired a non-don, if you got your employees running around, go to Costco and get me some more tomatoes because we just ran out of tomatoes. And they get in an accident on the way to or from Costco, you could be dragged into that lawsuit, okay, because they were on your clock. So that's hired and non-owned auto coverage. It protects the business owner. Now let's talk about property. This is the stuff. This is your stuff. You want your stuff back if it's gone. If you have a fire or anything along those lines, mostly fire, especially in Sonoma County, you want your stuff back. So you want to make sure that it's properly covered, it's valued, right? So this is the kind of thing you need with your insurance. This is why your insurance agent is important, because you're going to want the policy to grow and adjust. If you remodel your building, that means that building is going to cost more to replace. So you're going to want your insurance agent to have conversations with you to make sure that that building is properly valued. Just because it was right 10 years ago, there may not be enough money in that policy to get it back today. Property is also business income. So the money that you make, the profit, your bills, constant expenses, like if you have, if you're shut down because of a covered loss, but you have employees coming to work and doing stuff in order to get yourself back open again, there's money in that policy to make that payroll, okay? Consistent bills like your lease payments, your rent, any kind of business loan you have, that's covered under business income. So you don't go broke because you got money going out whether you open your doors or not. That money going out, you want protected. You don't want to go broke trying to get open back up again. So that business income takes care of that. The extra expense part is really nice because it helps you move to a different location. So if you're an office and your office burns, you can still work if you can get another office someplace. The extra expense covers the cost of getting you back up and running somewhere else until you can get back to your original place. Inland marine is kind of a misnomer. It's actually covers mobile property. They call it inland marine because originally it was marine coverage. So you have those big tankers that are sitting off the coast of LA trying to bring the product on shore. That's covered under a marine policy because they're in the ocean. But if it's not in the ocean, then it's called an inland marine. They could have called it something else. I think it's silly, but that's what it is. And that's what it is. So if you've got equipment moving around and you can't afford to lose that equipment, you need to get an inland marine policy to cover it. A BOP program, Business Owners Protection, is a simple way for small businesses like a hair salon or stores, bookstores, small, easy. It's a smaller policy. It covers both property and liability all on one. They're very inexpensive policies, but they've got a lot of bells and whistles and they're good for protection. The business grows, you're going to get out of it. You're not going to be able to stay in a BOP. You're going to have to go to a regular commercial package policy, which is more expensive, but it also will cover your business adequately. Commercial auto, if you're using your car, truck, or vehicle in the operation of your business, you really need to get a commercial auto policy. Your personal auto is there is some business use on a personal auto, but if you've got a sign on your business, like those magnetic door stickers that have your business information on your car, you should have a commercial auto policy. Personal lines carriers don't like that. So, and the commercial auto policy has $1 million liability coverage. A lot of personal lines only have 1, 2, or 300,000. Maybe you've got an umbrella over the top of that, but you want a commercial auto policy. Speaking of umbrellas, Umbrellas are really nice. They only cover liability, but they also go over the top of your workers' comp policy, your liability policy, and your commercial auto policy. It's extra coverage. So if something really, really bad happens and they burn through that lower limit, you've got $1, $2, $3, or $5 million that you can get to on the umbrella. So if somebody sues you for $4 million, the company is going to write a check for 1 million and you're going to be on the hook for the rest of it unless you have an umbrella. Workers' comp, we talked about that a little bit earlier today. If you've got employees, you need workers' comp. Oh, my time is up. I have one more slide. Let's go to this one. Just real quick, this is a risk matrix. Basically, I don't have to explain the whole thing, you just take a look at it, but if you can afford to lose it, don't insure it, okay? You're wasting your money. If you can't afford to lose it, then you need to buy insurance. So with that, I am done. Thank you very much.